Coin traders, what's going on? Thanks for joining me for the show looking at GRT, the graph token. GRT on that ticker, the big, nice API indexing crypto that hopefully we see a lot more opportunity out of and hopefully eventually a full-blown crypto here. Because I do think that does have a little bit of impact on the kind of potential right now of GRT since we are still tied to an ERC20 token. But nonetheless, I digress. We are going to be talking about the price setup and action right now for GRT. Now, so first starting off, crypto is showing a little bit of signs of sell-off, so it's not surprising that we're actually getting a little bit more of a pullback. But yeah, as you can probably see, we have a very strong downtrend resistance line that we've been stuck up ever since the huge rally at the start of the year, where we actually rallied over 300% coming off of our bottom and our low, just above the 5-cent psychological mark, before topping out over 23 cents. Now, good signs, though, is that we are still way on top of the lows that we did experience back at the start of the year or just before the start of the year, so the end of last year. And so if we look at a longer-term level of closing support that effectively now is acting as a double bottom after we had an initial bounce, a slow run down and test, and actually found a higher low before the big, nice, massive rally pump that we saw at the beginning of the year through the beginning of February. So from that level to current price points, that's still about a 100% gain on top of the start of the year. Now, just like we do have a downtrend resistance line, we also have a downtrending support line that is also in effect. So this is going to be one of the levels that we actually look at as well. But we are going to be targeting about the 10-cent psychological if we do experience a little bit more of a pullback. As we can see previously, this has been a nice bounce point for opportunity as well as a point of resistance and rejection. And if we actually zoom out a little bit more, you can see it's kind of the heart line of this consolidation point that we did experience. So I do anticipate if we turn on the VPVR volume profile visible range, that we're probably going to experience a little bit of a center point of mass, which is exactly what we see right now. So we know that from current price points, if we do see a little bit more of a pullback down to the 10-cent level, is going to be a huge point of mass. And likely I would expect a lot of buying pressure still be coming in at that level. If that does end up failing, though, and we do see a price pullback below that, then that would be an opportunity to actually look at this downtrend resistance or support line, as being a sign of potential where we could expect to see a lot more support coming in. And then zooming out a little bit more as well, back below the 10 cent, we're going to be looking at closing support still coming in just below that at about 9.65. And then really from there, if we do look left, we're going to have a very strong support coming in that was also previous resistance and support right below the 9 cent level. On the short-term setup as well, you can see point of downtrend resistance line that we are still getting stuck up at, so that is going to start to push prices down towards these levels of supports. Now, one of the things that we typically see once we actually see a little bit more of that pullback is we are still anticipating, unless we do see extremely bad conditions in the market, a little bit of a tightening range to ultimately start to form out here, especially after finding a lot of these longer-term strong support bottoms coming in. Well, one thing to consider is that if we actually clean up this chart here and turn on some of the volume and zoom in on the recent pattern, then you can see that we're actually looking at a complete decrease in overall bullish volume. So off the peak, when we did top out just below 1450, that was actually our peak amount of volume until now, actually seeing a complete decrease on this overall pullback. So now, unfortunately, we actually haven't seen the peaks necessarily rolling off as substantially as the bullish volume. And until we actually get a little bit more increase for a bullish volume, we're actually going to likely still see a taper off, since it is going to take that bullish volume to establish support and actually start to change the trend, confirm that bottom, and actually see prices reverse direction. So based on volume, along with the shorter term pattern, as well as the longer term pattern since playing out since February, unfortunately, this does still lean like a more bearish sided chart. But like we said, we still have plenty of lows below us right now. And in addition to that, just a reminder, we are still 100% above the end of the year lows. So definitely a good longer sign for some longer term accumulation, especially when we zoom out and we can see just how far this chart is pulled back. That does put us in a very nice, greater longer term accumulation zone. So despite even what the shorter term charts are doing, especially if we can make sure that GRT does maintain a higher low from what we saw at the end of last year, that should be a confidence boosting sign that we are still in this big long-term accumulation and that we will be finding a bottom and eventually starting to see the price rally once again. As of right now, there's not enough longer term signals to continue a perpetuous pullback and a continued longer bear cycle. And that's one of the reasons why it is so important that we highlight that we've actually already seen this semi-double bottom forming in at the end of last year. Now, if I go ahead and flip into the weekly chart and let's actually switch into a logarithmic scale, then let's actually take a look at this bottom, because we did find our very nice bottom at about 561, which had a very nice close longer term on this weekly. So we didn't see any weekly candles close on this chart below this level at 561. And so despite now, like we said, getting stuck up at these weekly exponential moving average resistances between 12 and 26, as you can see, we haven't had a close on top of those levels since we ended up crossing back bearish again. And so unfortunately, with the the June 10th flush that we saw, that is kind of a bad sign that we're not getting over that hump again. So likely I do still anticipate testing some of these lower lows, especially the weekly closes that we have coming in just below the 10-cent psychological level. So again, if that does break, the next level that we would be looking to for that weekly closing support is going to be coming in right at about 940, which, looking left, big point of resistance, point of support, and then big point of support. So those are our next relevant levels. And so even if we look at the price dipping below and actually testing 940 down to about the 9-cent level, even potentially down to the 8-cent level, from the low of this weekly closing support double bottom that we had, that would still be a 40% upside growth showing since the start of the year. And then if we do rally up to the 9-cent level, that's still going to be about a 60%. So it's still going to be a very nice solid return over where we saw for the end of the year, especially since we will still be confirming that longer term bottom. Now, coming off the start of the year, extremely nice bullish rally. If we do actually look from where prices bottomed out to where they did top out on that shorter term upside move on the start of the year, if we actually look at the 9-cent level, that is aligning with the 78.6 retracement, so that's still a fine level to return to. But that's also one of the reasons why it is going to be so critical for that to hold, because if it does hold, then it does solidify and include the long-term growth potential of seeing prices return back to the upside. If that does end up slipping, then likely it is more extreme in that instance that we will be running down and testing some of the lows once again. Personally, I don't think that's the most likely scenario and outcome at this point, but that's also another reason why it is so important right now that we do see a little bit longer term support established right at that 9-cent level at worst. But yeah, still plenty of potential right now to hold this bottom. Since we did have a lower high, we actually would be looking into forming an equilibrium type pattern. So I think that would be one of the best case scenarios as we do enter August into September. I think overall, though, crypto's not really going to see too much extreme price action and volatility, and we are still going to be entering a very longer term sideways boring stage, but we could still be expecting a bit of a pullback overall. As always, do love hearing everyone's thoughts and predictions, arguments, disagreements, all that stuff down in the comments sections below, so make sure you drop me a note and I will respond down below. That is going to go ahead and wrap up the show for today, though. Hope everyone enjoyed our update on GRT, the graph token. Make sure to go ahead and drop me a follow over on Twitter at Quinn_trades is the handle over there. Looking forward to chatting with everyone over there. All right. Well, as always, do appreciate all the continued love and support. It does mean so much. Stay safe, take care, and I'll catch you back in the next video.